David here, weekly week look. Today is Friday 13th of January, and as usual we're looking at the May contract 2017, and we start with the yearly chart, and here we are. You can see here quite clearly that obviously we're breaking out from this yearly high here, 144, last night's close 147. Obviously first target is the 60 SMA weekly. Monthly this would be at 100, and that comes in at 151.68, so we're looking for a test of 150. Stochastics are closing in, nothing to say there, no sell signal, but obviously massively overbought. Could indicate that we're now starting off obviously on a new upwards trend. Obviously we've had this consolidation for the last 3 years, and obviously this is a breaking of the norm of what we've seen over the last 3 years. We did do a study 2 weeks ago of what prices normally do in January, and you can see here quite clearly they normally over the last 3 years have fallen down, and this year they're reversing up, so that shows there's something different happening within the market structure. Go down into the monthly chart. See here, obviously you've got this green month here, performing here as we get through January. Swing high here. Obviously this is the last swing high here, May of 2015, and obviously looking very positive. Pop down into the weekly chart, all moving averages crossing up, good separation, good trend in place, taking out the swing high 144, second green candle here. As we get through to January, let's pop down into the all important daily, and you can see here obviously since September we've seen this run up here. November we came to halt, we can see this fall back, saw this sort of ABC move. Obviously what we can do now is indicate on these moving averages here. We've now got the short term, that would be the 10 and 30 crossing back up, and we've obviously got confirmation of that. We've held over that period. You can see we're well up here at the moment. Obviously excuse me, we've got the 60-day trend showing green, this here showing an upward slope, and obviously what we're getting now is this 30-day now coming back in close to the 6-day to give us a cross up. The important thing we've got to watch here is the swing high here, obviously 144. We've broken out that little gap here, and we've now, this is close above it here, so 1, 2, 3, 4, 5, so we've had 5 days above it, which I would consider is a clean break of that level. We may get a retest of it, you know, the market may come down and then go back up. We have gone slightly overvalued at the moment because obviously we're gone away from our 5-day moving average, but that'd be quite normal as we've had a quiet trading period over Christmas. What I've done here is put an Elliott wave count on here. Wave 1, this move up here is £19 a tonne. Wave 2, we've seen a retrace of £6 a tonne. And obviously with this projection now, we can now project off this move up here that we may be looking at a move of £30 a tonne, and that would put a projection of 166. Wave 5 long-term projection would be back up to 191, a £61 a tonne move. But obviously those are numbers we've got to keep in the back of our mind. Obviously key at the moment, our first test would be up to 150, 151, or this move back to test the swing high here of 144. Finally, I just draw the attention here. This is showing all the week futures. Obviously, spot here is January to 17, and obviously you can trade right through to November 2018 at the present moment. And obviously, what it's showing on here at the moment, you'd like to see, is the open interest is obviously all in May 2017, and obviously quite a big open interest. People hold, traded and holding positions for November 17, but there's only 42 lots for May 18, and this may be the reason. If you see that at the moment, this current May is trading at 146, and they priced May for 2018 at 141. Well, if you put it in store and over-yeared it, it would at least cost you £1.50 a tonne for 12 months. That would give you £18 a tonne. Well, at the moment, all it is showing £4.25. So it's quite obvious that obviously you can see that the shortage or the price has been run up in the spot but it's just not reflecting on the forward months at the present moment. Obviously November is got at a proper carry, but the long May is obviously not at the present moment. So obviously just another interesting point to keep an eye on, and I'll put an update this time next week. Thanks for